Hi, everybody. Welcome, welcome. I'm going to give you guys a few seconds before we officially get to rolling because I know it usually takes a while for you guys to get on, and I have to let everybody know that we're on. But in the meantime, let me just go live on Instagram. Let me do that real quick. Yeah. Okay. Let me log on. Mm-mm-mm. Okay. Post. Something else keeps popping. Okay, so we're about to be live on Instagram. So far, we got one person following us. Thank you. We're just doing our usual introduction, adding on. Wait a minute. Okay, we're officially live on Instagram, so we're good to wait. No, wait. Okay, do you want to go live Instagram? What's going on? There we go. So yeah, now we're live on Instagram. So let me just let a couple more groups know, and then we'll just do what we usually do. More people are getting on. Thank you guys for joining. I appreciate y'all. Don't forget that we are not on the platform you're watching us from. So if you want to leave a comment and have your name shown, you have to check us out on StreamYard. So we're going to be on StreamYard. But if you still want to comment and everything, you can. We will see. Oh, more people are joining. Excellent. Okay, thanks for joining. But if you guys want to still leave a comment or whatever, it will just show what platform you're under and it won't say your name. So if you want us to know your name, just please say your name. And again, just still hop on the StreamYard. And we'll start in another 60 seconds. I'm just doing the usual thing, letting all of our platforms know that we're on and that we're live. And then we'll be good to go. So just give me a few seconds, guys, and we can start. Mm, excellent, excellent. Okay, so I'm about to post us in a pretty large group right now. I think it has several, up to 1 million followers, active followers. Okay. All right, I guess we can get started. So, hi everybody. This is Tamaya Robles. I am your credit repair expert specialist. I am the owner of Fix My Credit Now, 850.com. I'm also the host of the podcast Coast to Coast Credit. Welcome, welcome. And today we are doing our weekly segment of Ask a Mortgage Loan Officer with Sean Rogers. And welcome, Sean. Welcome, welcome.
Thank you. Thank you. Pleasure to be here on a wonderful Sunday afternoon, no place I'd rather be. And today, I want to talk about assets and how I look at assets and how a loan officer will look at assets and bank statements and all the good stuff. So I'm going to go over a couple of items that I think are, how can I say, a lot of issues I see with bank statements and how we regard and how we treat them, our own bank accounts, and what could stop you from buying a house depending upon how your bank statement is set up and you use for your banking. Okay. So first things first. Now, when you're applying for any kind of standard transaction, when I say standard, I mean like an FHA loan in the first time home buyer programs, conventional USDA, VA, non-QM loans, right? We will look at your bank statements. There's two things we look for, or sometimes three things we look for on a bank statement, primarily. Then we'll get into the secondary items we look at. Number one is where your source of income is coming from, right? So if you tell me that you work at, I don't know, we'll say Target, okay, and I see on the deposits Target, all good, right? Some kind of Target payroll, right? Or something matching wherever the pay stubs say, right? But if I look on your bank statements, I see a deposit from Walmart, they're going to question that, right? So we look to see if employers and deposits are matching. Also, we want to make sure that matches the actual pay stub too. Okay. Second thing we look for are large deposits. Now, a lot of first-time home buyer toolkits that go out, they say, don't make any cash deposits or any large deposits. True, but if you have to, you have to. Let me explain how to kind of get away with it to a certain extent. For example, for most FHA, VA, conventional USDA loans, as long as that individual deposit is no more than 1% of the purchase price, okay, 1% of the purchase price, they're not going to ask you to source that money, okay? So 1% of the purchase price. So, for example, if you're buying a house and the house is worth $300,000, the max that we want to see in deposits that we can't source or trace will be $3,000. So 1% of the purchase price, if you simply have to deposit cash into your checking account, okay, for whatever odd reason. All right. Second thing we look at, okay, is the chain of large deposits. So let's say you need a deposit. Let's say you're buying a house at $300,000, and you tell me, you say, hey, Sean, I got the money for the down payment, and you tell me it's underneath your mattress. Okay. Now, obviously, I don't want to take that, right? I don't want to see that. Don't think that you can stagger deposits either. So, for example, now I just told you, I just said, right, no more than 1% for the deposit, right? So some people try to kind of get around that rule, and they deposit 1% on Thursday, another 1% on Friday, another 1% on Monday. It's not going to work. They're going to put all those into one. There's a cumulative deposit, and now you'll be over and I have to source that money. Okay, keep that in mind. All right. Now, if you happen to have a lot of cash at home that you've been saving up because you either A, don't trust the banks, or B, you feel you would spend it if you were to put it in the bank. Okay. If I'm going to use that money, what I have to do, I have to have you deposit that cash into your checking account. And I need to wait 2 statement cycles to use that money because I don't want to see that deposit when I ask for your 2 months of bank statements. Okay. Also, and the timing depends upon when your checking account cycles. It's not always January 1st till January 31st, or first of the month to the end of the month. It could be the middle of the month. It could be the third week, next to the next 3 weeks in the end of the month. It just depends upon when your statement cycles. So what you want to do is take a look at your bank statements, and they'll show you period beginning and period ending. That's what we would use. Okay. So we want to see 2 months of bank statements where I don't see that deposit, where you put that $10,000 in cash into your checking account. The money has to be seasoned. Seasoned funds is what it's called. Okay. It's not illegal. You're just kind of getting around it. But it has to be seasoned for 2 months. All right. If we don't see that deposit, to us, it doesn't exist. It's seasoned funds. You're good to go. Okay. Now, so once again, those are some of the biggest things that I see when it comes to bank statements, large cash deposits. Now, in the event, a lot of us sometimes we may get deposits from our friends. They may Zelle us some money. You went to the club Friday night, you paid for parking, or you paid for a bottle, and your boy Zelled you $300 or whatever, right? That's okay. That's okay, right? But if we happen to see a consistent amount of Zelles, so every week you're Zelling in, receiving in a deposit of $400 or $100, right? That may get suspicious to the underwriter. Maybe. Some ask, some don't ask, right? In the event they ask, you may have to explain it, right? You can say, hey, I do side work for my guy. I cut his grass on the weekend. He sends me money, right? That's a good enough explanation. They're not going to ask anything outside of that. We're not using that side hustle as income, right? Let's say there's a Zelle outgoing every month or every week or a consistent amount over a 2-month period, right? So we look at your bank statements and we happen to see on there every single month or every other week or whatever the case may be, you're Zelling out an exact amount every single month. They're going to ask, they could ask about that. Not saying that they will, but they could. Okay. They could say, hey, listen, I see you're paying Bob $200 every other week. Is What is this? Is this a bill? Is this something you're giving him? Is this child support? Is it alimony? Is it a car payment? Is it car insurance? What is this? You'll have to explain it. Okay. So the idea is, okay, for bank statements, we don't want to see a lot of Zales in and Zales out. Okay. If you have them, it's okay. I'm not saying stop living and doing you. All I'm saying is when we see it, and we might have to explain it. So when I'm reviewing your bank statements, you may have to explain to me what this is. Not trying to be nosy. I don't care what you do, right? But if it's either I'm gonna ask or the underwriter. You don't want them to ask. Okay, so it's better to get with me up front, just in case it's something that we need to kind of, take care of before the underwriting team sees it. Okay. Now, one of the other things that kind of hurts us, okay, overdrafts. I've had to decline loans because of multiple overdrafts. Overdrafts show inability to budget your finances. Okay. Now, if it's a one-off thing and you recovered or there was an error, we just got to explain what happened. Okay. We just got to explain it. All right. You can say, hey, listen, my son had a bill that had to come up and I had to pay it. It was outside of my budget and I got an overdraft. They want to see that it was a one-off occurrence. It wasn't a consistent thing of you being late multiple times or being overdraft because you're not balancing your budget properly, right? So we have to explain that, hey, look, this is what happened. I had to give Tamaya $500 for her light bill or whatever, right? And you're going to explain it was a one-off thing. This is not a consistent situation. And what I've done in the future to prevent this from happening again, I've readjusted my budget just in case of emergencies, or I save more money in case of emergencies, things like that, right? So if I happen to see those overdrafts, we have to explain them. Okay, we got to explain them. All right, but ideally, we don't want to see them. So if there's a situation that you may be in, and let's say for example, we're doing what we call a manual underwrite. Okay, so that means for certain reasons, you could have a higher debt to income ratio, or you could have a lowered credit score, derogatories in the past 12 months of late payments, collection accounts, charge, credit report, and you're becoming what they call a layered risk. So the more derogatories, higher the debt to income ratio, you may have a short time on the job, the more risks that you present in the application, right, the tighter things are going to get. So, for example, let's say I was applying for a mortgage and I was maxed out on my debt to income ratio. Okay. So I had like a 56% back in or a 50% back in ratio. And let's say that I had a couple of collection accounts that popped up in 2023 or in the past 12 months. Okay. Let's just say also that I had a 580 credit score. Right. And then also let's say that I'm only putting 3.5% down on a 30-year fixed mortgage. Okay. All those things that I'd mentioned are what they call layered risks or enhanced risks. Right. So that tells the underwriter or tells Fannie Mae, Freddie Mac, Ginnie Mae, tells them that, hey, look, Sean really ain't got it together. Right. He has low skin in the game, so low down payment. He has a lower credit score. He has derogatory screw-ups in his life in the past 12 months, either his fault or none. Doesn't matter. They're there, right? And then on top of that, I got overdrafts, right? So they're going to see that and put it all together and be like, you know what? You're not ready for this house. You're not ready. Now, it doesn't mean they're going to decline the loan, right? But we want to kind of get rid of some of the layered risk there. And the easy one to resolve quickly would be overdrafts. Do not overdraft your checking account. If you feel that you're about to, you want to do what you can to put some money into your checking account so you don't go over that limit over that limit, right? So to wrap it up, when it comes to overdrafts, we want to make sure that we don't see any if at all possible. Okay, so keep an eyeball on your checking account, your savings account, link them together. Make sure go through your checking accounts before you start the application process and see what you have coming out on a repetitive basis. You may have signed up for some kind of auto pay that you may not pay anymore, whatever the case may be, right? You want to make sure you have enough padding in there to whereas you're not overdrafting or getting close to overdraft. Very, very important. So we do not want to see overdrafts if at all possible. It does come up. We do understand that. Not necessarily a deal killer, right? But we just have to be able to explain it and how it won't happen and how it won't happen going forward. Okay. So that's the main thing about overdrafts. All right. Now, let's talk about paying for down payment and how it's going to get paid for and who's going to pay for it. Okay. So as you know, there are tons of down payment assistance programs out there that you can take, that you can do to help with down payment, with closing cost, right? And like I always say, sometimes free money can be expensive. I'll get into that in another segment. All right. However, let's talk about this when it comes to what we call gift funds. So let's say Tamaya is my big sister. And she says, you know what, Sean, I'm going to give you the money for the down payment for your home. So happy. Thank you. Thank you, team. She's going to give me 3.5%. So we're going to look at this in an FHA standpoint, right? She's giving me 3.5% on a house of $300,000, which is about $10,000 and some change, right? Now, if I'm using FHA financing, okay, Tamaya is going to wire that money in most cases for documentation purposes. She's going to wire that money, the $10,500 to the title company. Okay. Tamaya has to send the loan officer source or proof of funds. So that means Tamaya has to give the loan officer her bank statement. So remember, Tamaya's not buying the house. I'm buying the house, right? I'm buying the house. If I'm using FHA financing, I still got to take a look at Tamaya's bank statement. So if you guys have someone that's going to help you with your down payment and they're going to give you the money, okay, you may want to warn them that, hey, Sean's going to call you to ask you for your bank statement. I need a month of bank statements. I got to see where the money's coming from, right? I don't know if Tamaya sold 10 keys of coke to get that money. I don't know if she's financing terrorist activities. We don't know that, right? But once we look at the bank statements, we'll probably figure it out, right? So Tamaya has to send the loan officer a bank statement. I got to look at it. And if I see large deposits on that bank statement, guess what I'm going to do? I'm going to source them. I got to source them. Tamaya's going to get mad. She's going to say, that's not none of your business what you do when I do my money. I've heard it so many times, right? Listen, you can get mad as much as you want to. You can argue and fight and scream with me. I'm going to have to source those large deposits, right? You can be pissed off when we're at closing. But now I got to source that stuff, right? I've got to source it. All right. Keep that in mind. So what I like to do up front, if I have a customer and the customer says, hey, Sean, listen, mom is going to give me the money for the down payment. Okay, cool. Up front, you need to tell your mom, if I'm using FHA financing, I gotta see your bank statement. So get ready. Okay, get ready. All right. Now, once again, don't forget what I said earlier. For deposits, I have to source them, right? So if I see, we go back 2 months on a customer's bank statement. So if I pull your last 2 months of statements and I don't see anything, that you're fine. So read between the lines there. See what I'm saying? All right. Now, there's a question in the chat. Construction loans. Do you do second lien construction loans? I do not. I don't do second lien construction loans. Is second lien construction loans a thing in the broker world? I think so. I think I have a contact that does it on the commercial side when it comes to construction, but not for a primary residence. And they're very hard to do because a second lien construction loan, there's a high chance the second lien holder won't get paid due to probably issues on the first side of it. If you need a second loan, that means work went sideways, more than likely. Maybe I could be wrong about that, but sometimes work went sideways on the first lien. You ran out of money due to whatever, and there's a chance that the person could default, so they rarely do second lien. But I can look and see what we got. I don't think it's possible though. Construction loans on mobile homes, construction loans on manufactured homes, yes. So the money needed to pay for the pad, the permanent tie downs, the hookup from the pad to the street utilities, right? Yes, you can use a construction loan to pay for those items to pull your home from the dealership to the pad. Yes, correct. All right. Now, back to what I was saying about these bank statements. Where did I leave off at? I think I was talking about mom and
About
dad.
going back 2 months. That's where
Too
you
much.
left off at.
2 months. Yes. So once again, if mom gives you, if Tamaya gives me $10,500 3 months ago and it sits in my checking account, guess what? The money's seasoned. Now I got to see. Now that money's my money. Now I don't have to see Tamaya's checking account statement. Right? Okay. Now, second thing, if we're doing conventional financing, I don't have to see Tamaya's bank statement at all. Some lenders have what they call an overlay. That's a rule on top of a rule. But Fannie Mae states that if Tamaya wires the money to the title company, I don't have to source Tamaya's funds on conventional financing. It's only on FHA financing. Okay? Keep that in mind. So if we want to avoid the sourcing of funds when we're buying a house from a relative, when we're getting a gift from a relative, we want to make sure that we try to go conventional financing for a short amount of time. Okay. But if it's not a short amount of time, right, we can deposit that money into our checking accounts, let it season for 2 months, and then we're good to go. Okay. But once again, in the event you do conventional financing, you do not need to source the donor's funds. Once again, some lenders have overlays where they require that. Most of the guys that I use don't have any overlays attached to that guideline. Okay. Keep that in mind. All they have to see is the title when it comes in. Oh, am I still there?
Yeah. Yep.
Okay.
Loud and clear.
Good. Okay. Sorry, my screen went out for a second.
Okay. We
So
still see you
once
there.
again, those are some of the main. Say what?
No, I said we still see you and hear you.
Okay, good. I got a little bit of a lag. Okay, so those are some of the main things that I usually see when it comes to bank statements. I have a few minutes. One thing I also want to touch on when I see these bank statements, and I really don't like this. It bothers me to my soul, but hear me out. Klarna and Afterpay. Lord. Klarna and Afterpay. Okay. All right, guys. So this is sort of a new thing, right? The Klarna thing and Afterpay, where you can buy something, I don't know, something from McDonald's for $10 and you pay it over 3 or 4 months, or whatever the case may be, right?
Yeah. Supposed to help with your credit.
Yeah. So I understand there's a need for that in today's economy. I get it, right? But it can wreak havoc on the bank statements. So an underwriter sees that, okay? And this is the company, Klarna and Afterpay, to a certain extent, hasn't caught up to technology when it comes to lending. So if my underwriter sees any kind of Klarna or Afterpay, they can attach that to your debt to income ratio. Okay, keep that in mind. So if they see these payments coming out to Klarna and Afterpay, they can take that and apply it as a monthly obligation, thereby lowering your purchase price, depending upon how much it is, right? To avoid that, you want to pay off this Klarna or Afterpay. Pay it off before I see it on your bank statement, or pay it from some other bank statement, right? But ideally, hopefully we're not financing small items over a long period of time, paying eight or nine times for this number 2 from McDonald's. Hopefully we're not doing that, right? But we never know. We need what we need, right?
You never know. You never know.
No, it's hard out there in these streets. So
It is. No judgment. No judgment.
What we do, try to buy a house. We want to try to stop that if at all possible. Please, if at all possible. Okay.
For sure.
All right. Also on the bank statements, just like the Zelle and what else is there? Zelle and Cash Apps going back and forth.
Venmo.
Venmos, yeah, Venmo, right?
Mhm.
We see a lot of those. We're going to ask you about it, right?
Mhm.
We may ask you about it, especially ones that are to the same person or same group or same company or same phone number every single month. We're going to ask you about it. Also, if we look back and we see fixed amounts of money coming out of your checking account to the same company, we're going to ask about that too, because a lot of people that buy things on credit sometimes doesn't report to credit. Doesn't report to credit. So we look at your bank statements to figure out what you're paying. Where's your money going every month? We're going to look and see. We're going to ask you about it. Okay. So as an example, I had a guy about 2 weeks ago. He had a car payment coming out of his checking account. It wasn't showing on his credit report for whatever reason. It wasn't on his tri-merge. Okay. Didn't see it. Didn't see it at all. So we got his bank statements back. It's through his debt ratio way out of whack. Way out of whack, right? So it was, thankfully, it was caught in pre-approval underwriting. But it could have got bad if it was a rush situation. I didn't see his bank statements beforehand. It can get real south real quick. So when it comes to that, please let your loan officer know what you're shelling out per month, right? Usually when you talk to a loan officer, we do a soft pull or a hard pull. We're going to review your credit report with you. We're going to go through it line by line. We're going to say, hey, you're paying this per month for this credit card. You're paying this per month for this car payment. You're paying this per month for this installment loan, for this boat loan, this RV loan, for this mortgage. Whatever we see on the credit report, we try to call it out. And it's up to you to tell us if we're missing something, okay? Because 9 times out of 10, we're going to catch an underwriting. They're going to show up somewhere. We're going to catch it, okay? So please let us know up front. Be truthful and honest with us so we can try to figure it out and get past the hurdle. Don't try to hide it from us when the time comes, because we're going to end up finding it anyway. And it's not going to be pretty when we do find it. Please. All right. Okay. I think that's all I really had on bank statements. That's all I had. Real quick.
If we could just, okay, I'm sorry.
Yeah, real quick.
Mm-hmm.
2 things on the bank statements also. I need all pages. If you look at the top right-hand corner, it shows page 1 of 5. I need all 5. Just because 5 is blank doesn't mean I don't need it. I want to see it. Okay? I don't care what's on there. 1 through 5, I need all 5. All right. Also, when you're trying to print these things out or you're trying to get them over to me, I cannot take screenshots of bank statements. Won't do it, can't do it. Can't do it. Okay. However, if you print them out and take a picture of them, I can take that. As long as I
What's
see all
the
the because they say screenshots can be editable.
Okay. I thought you could edit a PDF too.
You
Because
can edit
isn't that a PDF if you print it out?
yeah.
I could be wrong.
No, you're
Okay.
right. You're totally right. You can edit a PDF if you're good with Photoshop, right? I want you to do that. But yes, you can edit anything. It just has to add up. But yes, because a lot of us have mobile banking, right? We just can't have you take cell phone screenshots and email those or text me those screenshots. I can't take that. You have to download the actual statement. And then there's a document that we need called a transaction history. And here's why we need that. Let's say you get under contract, you buy a house on May the 1st. Okay, you go under contract. And by May the 5th, you're paying to the title company your earnest money deposit, your EMD, your good faith deposit, right? You're paying that, which is usually in most cases 1% of the purchase price or more, depending upon how your realtor negotiates for you, right? So you're going to take out, we'll say $3,000. You're going to give that money to the title company. Also, don't pay the EMD in cash or money order, cashier's check only, okay, or wire. Now, you're going to give that money to the title company. In order for me to give you credit for that money at closing, I've got to see it come out of your checking account.
Yes.
And remember, your bank statement hasn't cut yet, so you're going to log into your checking account from a laptop or a desktop, not your mobile device, and you're going to print what they call a transaction history. The trans history, what it does, it gives you the transactions to date. because a statement that was cut on the first won't have what happened on the fifth or the third, right?
Mm-hmm.
So you have to go log into your checking account from a mobile. I'm sorry, from a desktop browser, which can be from a laptop or a desktop, not from an iPad or a whatever screen, whatever they have, right? It has to
Mm-hmm.
be from a desktop browser, is what it's called, a desktop browser. And then you'll usually right click on the screen somewhere. You can print PDF, the trans history. It has to have what they call a header and a footer at the bottom. There's a URL code at the bottom that has to show on that trans history. Okay. In most cases, to get that, with most Windows computers, you're going to right click on the screen, select print, save as PDF, select more options or advanced options. And below that, you'll see add headers and footers. That will add in the URL code at the bottom that you'll need that they will ask for. If you don't send me that, I will reject your bank statement of the trans history. Keep that in mind. Okay. Tamara, what are you about to ask me?
No, it was just pausing for the cause. I just wanted to remind everybody because I see people coming in and out. So if you have any questions for Sean, please, please, please ask. Even if it's off topic, we're just bringing up key points here. Be sure to like, comment, share, subscribe, all that good stuff. But that's it. I just wanted to remind people.
Awesome. Thank you. Yes. Like, comment, share, subscribe. Please check us out every Sunday here. So once again, it's not too hard, right? When it comes to bank statements, we don't try to tear you apart. So initially, what I do, if you call me for an application and we go through it, then it's time to get the documents into me. I'm going to go through the bank statements with you. Now, we don't care what you buy. It's not up to us, right? We don't care what you buy. If you're spending money, you know, at the sex shop every week, it's none of my business. None of my business how you get down, right? I don't care. We don't care about that, right?
No, we don't.
What we care about is the money coming into your checking account, where that's coming from,
Mhm.
your
Mhm.
payrolls, right? Anything that's an out of the norm deposit for you, right? That's what we're looking at. See what I'm saying? Where you spend your money at, what you do, right? We may talk about you a little bit, but it doesn't matter when it comes to approval, right? It's not important. We don't care. It doesn't dictate whether you get a loan or not. Okay, keep that in mind. All right. So we'll go through the bank statements together. We'll figure out what's going on there. We'll see the deposits, call them out. And in most cases, if you go into the bank and you, let's say Tamaya, she gets a check from her aunt, like $10,000 or whatever, right? Or 5,000 or 3,000, whatever it is. It's a large deposit, right? So once again, anything over 1% of the sales price is a large deposit. Okay. So when you log onto your checking account, or when you walk into the bank and you give the teller that check, she's going to scan that check in a little situation, a little deal, right? She's going to scan it along with your deposit slip, right? So that image goes to your checking account, your online banking. And usually, if you pull up your online banking, you'll be able to see an image of that check. I need that image. If that deposit is over 1% of the balance, I'm sorry, 1% of the purchase price, I need that image. So you're going to click on that image, print it, and email it to me. All right. Once again, we're not trying to be getting your business. We're not being nosy. We need what we need. We're going to get it if you want to get this house. Give me your docs. Give me what I need. I'll give you some keys. Right. Even exchange. Right. But to wrap up, T, I think those are some of the biggest offenders or the biggest things that I see that can hinder people or they're confused about when it comes to buying a home. I'm sorry, when it comes to bank statements and buying a home,
Mhm.
those from the challenges we fall into. So we want to make sure we kind of head that off at the pass. So if you're thinking about buying a home in the next 6 months to a year, please take heed to what I just said about that. Rule of thumb, if you're saving up for a down payment, ideally you want to put it into a savings account or a checking account into your bank. Saving it at home underneath your mattress or underneath your pillow, and then the last minute put it into the checking account, it's not going to bode well for you. Okay. What you want to do is if you can not spend it, slap it into the checking account and, deposits come in every month. That's totally fine. And then by the time you're ready to buy, the money's there and you're good to go. So please try not to make those huge, large cash deposits. Unless we get social security.
Excellent. So, thank you so much. much for sharing that. That's really important. A lot of people, even though I'm the credit expert and I'm not a lender, a lot of people ask me that question. They ask me questions pertaining to what you need, especially as far as bank statements are concerned, pay stubs, all of that. So thank you. That was huge. I also remember, not for me to keep flashing back, but a lot of people are new to us. Some people are familiar, but a lot of people are new to us. But um, I bought my first home from you, and I was trying to quit my job, and that was really something you were very strong and forthcoming with don't do, right? But one of the
Right,
things that I wanted to do for my down payment, I was saving up, but I didn't have, I think I needed like 10,000, I do believe. So the option was my parents or even my 401k. Is it 401k? Yeah, I think my 401k. But my parents were going to give me a lump sum of money. I think I wound up doing just pulling out of my 401k or something like that. But I still had to prove that. I had to prove to you guys where I got that from,
right,
and I had to. You needed the bank statement then as well. So I get it. I dig
right.
it.
Yeah, I think we had what we got to do. We got to see where. So we have to see it coming out of the 401k. Then we got to see
Mhm.
it going into the checking account. Then we got to
Mhm.
see it going out of the checking account to the title company. So we got to
Yep.
see 3 points in most cases, right?
I
Uh,
couldn't even touch it to get something to eat. Like I
right,
couldn't touch that. Uh-uh.
right. That's when we close, right?
Mhm. Mhm. So last Sunday, I did a live when I don't know if you checked it out or not, talking about the FICO 10 and the FICO 10T. Did you get
I
an
didn't get a chance to
opportunity
check
to?
it out. No, I'm so sorry.
Okay.
I didn't. But I
Okay.
want you to review that if
Well,
you can.
huh?
I said I want you to review that if you can. Talk about it for a minute.
Okay. Okay, definitely. So I'm actually going, if you guys could give me just a moment, I'm gonna pull that up. Give me a second. So while I'm pulling the article up, um, what I wanted to bring up, so the issue is FICO 10 and the FICO 10T is a credit, is another scoring credit monitoring. Okay, I'm saying this wrong. It's another credit model. So historically, we're familiar with. This is not the article I wanted to go to. Sorry, I'm trying to find the article and explain. So historically, we know what our FICO score is, or you might know the FICO score, but there's so many different scoring models, and they range from classic FICO 2, FICO 5, FICO 8, 9, so on and so forth. So every 5 years, a new credit model is going to be released under FICO and as well as Vantage. Vantage score is simply FICO's competitor. Again, I'm just saying this for those that don't already know. I have, if you go on my YouTube channel, you will see me breaking down what each of them are. But at the moment, we are technically at FICO 10 and FICO 10T. FICO 10 and 10T is the only FICO model that has two different versions of itself out of all of them, which is like concerning. There's so many concerning things with this, to be honest with you, but like this is huge because first of all, it was released 2 years early. We were still during in the pandemic when it was released. And then this is the only one that has a FICO 10T, which it means trending data, which means it also is going to go back 2 years. So let's say, just for the sake of conversation, let's say you're at a 750 credit score today because you worked hard, you signed up with fixmycreditnow50.com, and we helped you get to that score.
Right.
And but you're trying to get a loan from somebody, and please keep in mind I'm still looking for the article. But so you are pretty much applying for a loan, but they're not looking at the regular, maybe FICO 8, because most companies right now are using FICO 8. They're not even using FICO 9, and FICO 8 is pretty old itself. They're looking at the FICO 10T and they're going to go back 2 years. Well, let's say 2 years ago you were at a 500, not a 750, you're at a 500. They're going to determine whether or not you're approved for a mortgage. I'm sorry, not a mortgage, approved for a loan based off of what where you were 2 years ago. Okay. So
Nice.
it's like judging someone's past. Hold on, FICO 10T. I'm trying to find the article for you guys. So it is judging somebody from the past. That's what it is in a nutshell.
Would they
And
use like an average? Like, will they take the 750 that we have today and then the 500 we had 2 years ago and kind of meet in the
no,
middle? No?
no.
Oof.
So
Oof.
matter of fact, so I'm gonna bring up the article, but let me just give you guys a visual here. I can give you guys a visual right now. I just want to make sure I protect their this particular client's personal information. Oh, my FICO. So what I'm doing is I'm going under my FICO, and I was actually supposed to go check out another company that will show all three FICO scores. But to my knowledge, my FICO is the only company that will allow you to look at every single FICO credit model from classic all the way to FICO 10T. So I'm about to share this screen with y'all right now. And I don't think I ever did this live. This is crazy, but I've done plenty of videos explaining this. So can you guys see the screen here? Can you see it, Sean? Yeah. Okay. So technically, this is considered a consumer credit score. So a consumer credit score is very forgiving. You can have some positives, some negatives on there, and either way, your score will gradually go up. As you can see, this is a client of mine. I already know what's going on with her personal life and her credit, but typically she has an extremely high credit score. So, but I'm using this as an example. But as you can see, there's potential her score has been going up, believe it or not. But this is a consumer credit score. For example, if you try to get a gas card or something like that, they'll run your credit, store cards, things like that. But if you scroll down, you'll see, and I love how they have the layout here. So it's an easy read. So if you want to know what your mortgage score is, you click that. So if, let's say, before you go to Sean, if you want a general idea of where your credit actually is, you're not going to look at your consumer score. Like, this is everybody's score, right? Everybody's number. It's irrelevant when it comes to a mortgage. It's going to be something different. When you try to purchase a car loan, you're going to have a different credit score, credit card, so on and so forth. But it also is going to tell you what your score is going to look like with the FICO 10 and the FICO 10T. Now, because her score is so drastically low, I'm actually going to use another client, which is super high, so you can see the difference. But let's take a look. So currently the FICO 8, which is an older credit model, this is where her consumer score is. So let's say she's in close to the mid 500s. But if you look at her mortgage score, which is FICO 5, 4, and 2, she's way low, way low, right? So Experian is slightly better. All right, cool. So I just gave y'all that example. But if you look at her FICO 10, she's even lower, right? Because they're going back in time. They're going back in time. Okay, this is way back in time of when they fit. No, I'm sorry, this is where she's at now, but this is them going back in time. So her FICO 10T, this is what it looks like. Her credit score is pretty low. They also have a FICO score 10 for auto. That's new. But as you can see, there's a drastic difference when it comes to the scores. Now, again, she already has a low credit score, but in all actuality, it's only because she has high utilization. And once she pays her credit cards down, she's golden. Her score is going to shoot right up. So let me see if I can get another client. I'm going to stop sharing for a minute just so I can protect that person's, their personal information. Let me log out of this one. And I'm going to pull up another client. So this client is going to be the complete opposite. They have a crazy high credit score. Let me just make sure I have the right client here. I think I have it right here. Da-da-da-da-da. Nope. So what you want to do, and I have clients that don't pay for the full shebang. So like if you want to see all your credit scores, you literally have to pay the highest package. It's a business. It is what it is. So I tell people if you really want to know what all your credit scores are, go to my FICO pay for the highest package. For that client I just showed you, I paid for her package just so I can use this as an example. I think this is the person and then you just cancel. Okay, so here's the person. I'm going to share my screen again with you guys. Thank you guys for sticking through this. But this is what it means to be live and sharing with you guys. So can you see the screen? This is a whole different client.
Mm-hmm.
I'm assuming you can. Okay, so April 20, what is this? April 18th, April 18th, 1920. So this is pretty current. High credit utilization. Everything else is pretty decent. So if they pay this down to 15% or less, they'll probably be in the mid 700s. So it is what it is. But this is their basic FICO score, their consumer score, FICO 8. So try to keep the numbers in your mind 615, 615, 623. Look at the mortgage score. So if they were to get a mortgage right now, they're golden. Look at that. So if Sean were to run this person's credit score and he's looking at a FICO 5, 4, and 2, of course this person's going to get pre-approved, right?
Mm-hmm.
However, my issue and what we were discussing last week is that now they're saying they're going by a FICO 10 and a FICO 10T. Same person. Remember, just the flashback. This is her basic FICO score 8. 615, 615. Her score dropped 79 points, right? Probably
Mm-hmm.
because she went overboard on her credit cards. No judgment. This is judgment free zone, and that's not the point. But let's say that's where she is overall. But if she were trying to get a mortgage and the mortgage lender chose to use the FICO score 10 or the FICO score 10T, this is what we're looking at now. Okay. So if they are using FICO Classic, FICO 5, FICO 4, FICO 2, they will be looking at this score. This is what this is what the lender would I guess base your rates off of as far as your score is concerned. But now they're saying that it's not being enforced, and I'm going to pull up the article. I'm still looking for the article. But this I just wanted to give you guys a visual that now this is what you guys this is what the mortgage lenders can use now, and it's concerning. Let me get out of the screen real quick. As I'm still looking, do you guys have any questions? I know that might be throwing a lot of y'all off. I do have videos where I'm literally explaining how to read your credit report, how to look at a FICO Vantage credit score, and what this FICO 10 and 10T is doing. So as I'm looking, do you guys have any questions? Let me know.
I just shot it to your top of your box there.
Oh, I'm sorry. It was what happened? I'm sorry. You shot what?
I shot the article to the top of your box, top of your inbox.
The power. Oh, my inbox. Oh, okay,
Mm-hmm.
hold on.
Or the link, I should say.
I don't. I don't see anything.
You see it? No.
Mm-mm. You sent
Yes.
me a private chat.
I put it. I sent to your Yahoo address.
Oh, sorry. Okay. Thank you. All right. Let me check it out. Yes. Thank you, Sean. Thank you. All right. So let me click on here. I'm gonna open it up and I'm gonna share the screen. So what I did last weekend, Sean, just again for the sake of time, I didn't read the whole article.
Mm-hmm.
Mostly because I don't feel I'm in a position to read and explain something that's not in my field. So, but I obviously, you guys, I'm a credit repair expert. So sometimes if you guys come to me and I refer you guys out to Sean, And then you guys are asking me like certain questions, and I've dealt with this and mortgage lenders and Sean and worked with him for so long. I know the gist of what's needed, but both industries are changing drastically, as you can see. So to stay current, I check out these types of articles and I talk to Sean about it. So I'm going to just go over like some key points, but they're basically, and if anybody wants to check it out, this website is called certifiedcredit.com/new changes. So new changes coming to credit scoring models. And this was March 13th, 2024. The reality is this model, FICO 10 and FICO 10T, it already came out. It already came out. The issue is, the concern is, um what is it, Fannie Mae and Freddie Mac, they didn't enforce the FICO 10 and the FICO 10T for the mortgage lenders. They never, in my opinion, they never really do, because you guys are always on the older models. You're always on the classic. You're always on the 5, 4, and 2, as we just saw. So it's just concerning that now you guys have to use the FICO 10 or FICO 10T. Is it mandatory? Is it optional? So anyway, this part, just to break it down, is just what are the new credit scoring models. I already explained that. What's the difference between these two new credit scoring models, which is the Vantage 4.0 and the FICO 10T. That's not it. The 4.0 is Vantage scores equivalent to FICO 10T. That's all it is. Nobody uses it, just like nobody uses the FICO 10T or a 10 right now. Not too many people. What's the difference between these models? I already explained that. What are the credit score requirements? So this is kind of where we get into the meat and potatoes as far as mortgages are concerned. So it says historically, mortgage lenders have been required to pull tri-merge credit reports. I have no idea what that is, Sean. I'm sure you're going to explain that. For conforming mortgage loan applications, these credit reports contain credit scores from all three major credit. Okay, so that explains it. These tri-merge credit reports, I guess, are the three bureaus on the credit report. Once the new buy merge requirement takes hold, mortgage lenders will need to order credit scores from two of the three credit bureaus. Credit bureaus selection will be left up to the mortgage lender's decision. So that's
So hold on. So when it comes to that, I don't think Fannie Mae, Freddie Mac, Ginnie Mae, they've come out with. I don't think they've come out with a determination of if they will allow that or not. So for all intents and purposes, we're going to look at risk, right? So I don't know if that means that we can pull a tri-merge up front and then we make the determination as loan officers or lenders what two of the three to use. So of course I want to use the best ones, right? Ideally, but that may not be the case. So they haven't released guidance on that just yet, because once FHFA releases that data, they're going to release the instructions down to the lenders, and the lenders will then go and disseminate the information, and then at the same time, they may add. They're going to give the lenders somewhat of a wide berth, possibly, right? And then the lenders will determine risk, and they're going to say, okay, for lender ABC, we want you to use Experian and Equifax. And maybe lender DFG may say, we want TransUnion and Equifax, right? So honestly, I won't know until it hits the fan what we're going to be able to use. And when it's coming, I think, if I'm reading this right, first quarter of 2025. So if this scares you, you got some time to buy a house, right? So quarter one, 2025, and when it's probably going to hit the lenders, from what we're seeing on this side.
But here's my question, and I respect the news article. I did my research. I don't see a lot of talk about it, but you could correct me if I'm wrong, but lenders have never used, mortgage lenders and underwriting has never used the most current scoring model. You guys have always seemed to have been stuck on the old models. So I would find it weird that for all of these years, I'm assuming we're talking decades now, that you
Mhm.
guys have been using FICO Classic, what is it, 254 or what, 4 or 5, whatever, right? The lowest, oldest FICO scoring models, and then all of a sudden, boom, you're gonna skip FICO 7, FICO 8, FICO 9, and then just drop in the FICO 10 and FICO 10T and go back in time to determine whether these people are pre-approved. I don't understand that part, because if you haven't, I wasn't concerned because you guys haven't been doing it. You guys, we
Mhm.
can be on FICO 22. You guys are still looking at FICO Classic.
Right.
So that, like, is there even a real need for a concern? Do you think Fannie Mae or the higher ups they're just saying it's up to the lender what they want to do? What do you guys have free range with that? That's what I want to know.
So no, don't have free
Mm.
range with that. So most conventional Fannie Mae, Freddie Mac is governed by Federal Housing Finance Authority, FHFA, right? That comes from DC, federal government. So remember, still to this day, any conventional loans, conforming conventional loans, albeit you use Fannie Mae, Freddie Mac, right? It's still to a certain extent subsidized pricing from the federal government, FHA, VA, USDA, right? It's all subsidized. When you get into private money, that money's not subsidized. So the federal government's releasing this probably based upon risk. So they may have looked at Model 7, Model 8, Model 9, or like, you guys are giving these borrowers too much sauce on the credit. Because with FICO 8 right now, a FICO 8 score is always higher than a FICO 2, 4, and 5 in most cases,
Mhm,
right?
mhm,
So
mhm.
lenders are like, not using that. Well, won't like it. Y'all give them, because remember, it's all about the profit too, right? Just don't forget, this is a
Yeah.
business, right? If a
Mhm,
lender is going to charge, if a lender, if you're going to have a lower credit score, guess what you're going to pay? You're going to pay a higher
mhm,
rate or more money for that rate. It's going to cost you. We make more money.
mhm, mhm,
We don't, right? But the government does, right? It's risk
mhm,
based pricing. The investors, the coupon rate could be higher on the backside, which we never see, right? So the federal government makes more money to give a lower FICO score potentially, right? Now,
mhm,
um, I think now this is not written down anywhere. This is just pure speculation. So take what I say with a grain of salt, right? I think FICO 10T is probably the most aggressively conservative scoring model since FICO Classic, right? So
mhm,
lenders see, they're
mhm,
like, you know what? This goes back pretty far. You know what? We can rock with this. Let's go and let's skip over all these
mhm.
other FICO models. Let's go to 10T. Bam.
Yeah.
Coming out January or what did I say? First or second quarter 2025.
25. Yeah. Mhm,
So yeah, I think that being that it spans over a long time frame and it could be harder to manipulate time, right?
mhm,
I think that they look at that and they're like, hey, this is somewhat of a safe bet, right? It's a safe bet. And maybe the conspiracy theorists in the room are like, they don't want us to own any homes anymore. They want to just rent, make us rent everything. I'm not going to get into there. I'm not going there, right? I'm just,
I'll go there. I always go there. Like that. I don't mind putting my little tinfoil kufi or kimar on. I don't mind
right.
doing that, but I'm still a logical person at the same time. So I like to look at it from all possible aspects too.
Mm-hmm.
And so here's the thing. Just like FHFA, is that what you called it? Just like that's regulated by the government, so is credit, right? And
Mm-hmm.
there's been a lot of crazy new changes regarding credit, to the point where credit repair experts are leaving the game quickly. They've
Mm.
left. They're gone. I'm like one of the few still standing on this sunken ship. And they're turning into like credit counselors and consultants for firms and things like that, because there's still going to be credit. Your credit is always going to be there, but when it comes to the repairing of credit, that's
Mhm.
obsolete. But credit's always going to be there because that's how America's running. We're built off of debt. The more debt you have, like, there's money off of that. So um so what I'm telling my people, I'm trying to tell everyone, is get your credit fixed yesterday. Get it together now. Just so you have your credit together in preparation for whatever else is going to change. Like when people come to me and they're like, "Yeah, I need you to fix my credit, so I'm trying to get a house." How soon are you trying to get a house? Oh, another 2 years, buddy. You need to fix your credit. It doesn't take me that long, depending on what's going on with your personal credit. It doesn't take me that long to fix your credit. If you're listening, following instructions, taking on the tips and things like that. But go hurry up and get your house. Lock it in before we're on to something new. The government's on to some new stuff, is what I'm saying. I mean, it goes back to, if you stay ready, you never have to get ready.
Right.
That part.
Right.
I don't trust the system. I don't agree with the system. It's supposed to be a tool, but now that we learned how to use the tool, i.e., credit repair, you're switching up now. So what do? Stay locked in. Get your credit fixed. Just fix it while you can fix it, and purchase assets. Get a house, get another house, get another house. Like, you know what I mean? While you can. But as far as like the apartments are concerned, we've talked about that before. We've talked about it's hard for people to get apartments now. And the things that you ask for, these apartment complexes and apartments and landlords, they don't ask for that. So I would rather give you a bank statement and you not worry about my criminal past. Like, you know what I'm saying? Why I
Right.
got this bag of money sitting here. Like, I'd rather do that, and I own it, and it's a asset, and I can sell it if I need to and get another house. I would rather do that than have an apartment and they're judging me and all this stuff. Like, I would rather go the home buying way. But
Right.
it was just weird that I saw that article and they're like, "Oh yeah, the FICO 10T mortgage lenders, this is." I'm like, you guys are never current, never current.
Yeah, I think that's why they just jumped from one model to the this big leap to the next. Um, that's no other way to explain it because it's the safest one. It really is the safest one when it comes to a from a calculated risk standpoint, right?
Mm-hmm.
Because we're in the business of risk, right? We calculate risk all day long. And what kind of risky asset are you? What kind of risky asset class are you, right? If you because so basically right now a homeowner can hide their BS. They can call T, get all the crap off their credit report really quick, and hey, I'm 750 credit score. Look at me. Look at me.
Yep.
And we're like, oh, great. You're such a good,
Yeah. You're
you pay your bills on
amazing.
time. Your life is stable. Everything's great with you. Here's a house,
Mm-hmm.
right?
Mm-hmm.
Now they can see past all that and be like, no, you're good now. But 2 years ago, last month, you were
You're
trash,
trash.
right? Right.
You're trash.
So I think now, I think it's going to, like I said, it's going to potentially it could um, weed out or cut down the amount of eligible home buyers if you don't have maybe a good 24-month history of a clean credit profile, right?
Mm-hmm.
But once
Mm-hmm.
again, I guess we'll see. We'll cross that bridge when we get to it and see what it really looks like, right?
Mm-hmm.
It could be another way they're trying to slow down home prices and home buying, right? The less people that you have to qualify for a home, you know what I mean?
Mm-hmm. Yeah.
The
But
more,
one of the things that I would like to everybody to know is, regardless of how many changes there will be, is in the financial world, as far as mortgages concerned, real estate, whatever, there's always a solution. There's always a solution. You just have to keep your ear to the street, follow us, listen, stay current with us, and we'll give you that answer. will give you that answer. This is just things like this is just another roadblock, but it's not an impossible situation. As long as there's people on earth, they're going to need a home. And if they're blocking everybody from getting a home, that doesn't even make sense. That's just a roadblock. Like, how are we going to get around it if we need to? If we need to.
It's
So,
happened before. Just like what back in the early, I'm sorry, not early, um, the late, uh, late 2000 when the crash happened. Everybody said, "How can I buy a house now when I have to go stated income?" Right? We as consumers, we adapted. Right? We just adapt and we keep it pushing and find a way to buy our house. Right? Products and programs do change over the course. Yes, over the past 12, 13 years, has gotten a lot more stringent to buy a home as opposed to what it was in 2008, 2009. But yes, homeowners and Americans do overcome. We'll figure out a way to get it done and play by the rules and adjust accordingly and, meet the end goal there. It is
mhm.
possible. So I do agree with you, T, when you say that, because every 10 years is a big shakeup. Something happens that's somewhat large scale. And then we get a little shocked for a little bit, and then the next day is business as usual. That's what it is.
Yep.
We
Like the
adapt.
young kids say, life be life and it's still gonna keep life in.
That's
Life
right.
is still gonna move on.
That's right.
Hmm.
So right.
All right. Well, we've hit the past the hour mark, which is great. So I think now, unless anybody out there has any questions, um, I'll give it a few seconds. But for the most part, let's wrap this up. So I just wanted to say thank you guys for liking. Be sure to comment even after the live is over because a lot of you guys check us out when it's over, which is great. Be sure to comment, subscribe. Sean's information. If you have any mortgage questions or you're looking to purchase a home, Sean's information is in the description. If you need credit repair, same thing, my information is in the description. What I would recommend everyone to do, because this is ideal, if you are looking to purchase a home, go to Sean first because I follow what Sean says. I follow his direction. So after he pulls your credit report, you may not need credit repair, or you may just need some guidance or a trade line or whatever. If you come to me first, being the credit expert that I am, I'm going to just try to fix everything unnecessarily. You don't need a perfect credit report to purchase a home. So I just strongly recommend you guys check out Sean first. And then if you need my services, Sean will guide you from there. But in the meantime, that's pretty much all I have. I'm gonna turn it over to you, Sean.
All right. Well, thank you guys for tuning in once again. If you have any questions, please feel free to reach out directly. Remember, guys, we have tons of programs available to you, a lot of options. And don't forget, don't be afraid to just call me and apply, right? It takes 5 minutes of your time, maybe 10 minutes of your time to apply. And we can get you a game plan together within 10 minutes. And I can tell you what you got to fix. And if anything needs to be fixed, refer you back to Maya for a quick fix and get you ready to buy your house. But the biggest issue that I see out there is folks are just afraid to apply or they're afraid to hear me say no or whatever. I'm not going to beat you up or cut you down. We're going to show you what's wrong, show you how to fix it, and then you take it from there.
Excellent. Excellent. All right. Well, we wish you guys the best of luck on your credit journey. We'll see you next week.
Take care, guys.